At 12:01 a.m. Eastern Time, while most Americans were asleep, part of the federal government technically ran out of money. That moment marked the start of what's called a partial government shutdown, not the entire government closing, but a specific set of agencies losing their legal authority to spend. The reason this matters is simple. When Congress doesn't pass funding in time, the government is required by law to stop certain work. It's not symbolic, it's mechanical. And even short interruptions ripple outward into paychecks, services, and public confidence. Here's what actually happened. In the days leading up to the deadline, Senate negotiators and the White House reached a compromise spending package. The Senate approved it late Friday by a 71-29 vote. The package funded 5 appropriations bills for the full year and temporarily extended funding for the Department of Homeland Security, DHS, for about 2 weeks, through roughly February 13th. But Congress has 2 chambers, and the House of Representatives did not vote on the package before the clock ran out. When the deadline passed at 12:01 a.m., any agency not covered by enacted funding automatically entered what's called lapse status. Within minutes, the White House Office of Management and Budget sent guidance directing agencies to execute orderly shutdown procedures. That language comes directly from official memos. Agencies don't improvise in this situation. They follow contingency plans written years in advance. A partial shutdown does not mean buildings go dark or airports close. It means agencies split their workforce into 2 categories. Accepted employees, sometimes called essential, must continue working because their roles protect life, property, or core government functions. Everyone else is furloughed, which is temporary unpaid leave. They are told to stop working immediately. Exact furlough numbers are not fully confirmed yet. Agencies typically release estimates rather than final counts in the first hours. Reporting describes the impact as affecting dozens of agencies, including departments like Defense, State, Treasury, Labor, Health and Human Services, Education, Transportation, and Housing and Urban Development. Some functions inside those departments continue, others pause. That's why it's partial. Funding coverage varies by program, not just by department name. So far, this shutdown is more administrative than visible to the public. Agencies are sending notices, categorizing staff, and preparing for service slowdowns. The first business day after a lapse is when disruption becomes measurable. Grant processing, regulatory approvals, contract actions, and customer service lines are often the first things to stall. Courts and administrative systems also operate on contingency reserves that shrink with each day. Why did this happen right at the deadline instead of earlier? The short answer is leverage. Funding deadlines concentrate political pressure. Negotiators separated DHS funding from the rest of the package because immigration enforcement and border policy remain flashpoints. By isolating DHS into a temporary extension, lawmakers created a narrow window to continue arguing without blocking the entire government. But that structure also raised the stakes. The House chose not to fast-track the Senate deal before leaving session, and Democratic leaders signaled they wanted debate rather than a rapid vote. The result was a timing gap, not a collapse of talks, but a legal funding lapse nonetheless. This confrontation is less about an immediate policy break than about bargaining power. A short shutdown shifts pressure unevenly. Federal workers feel it first because paychecks are delayed. Contractors and small vendors can feel it even faster because they don't have guaranteed back pay protections. Historically, Congress authorizes back pay for furloughed employees after shutdowns, but that is technically a separate law each time, not automatic. Even the expectation of repayment does not prevent short-term financial stress. For Americans outside government, the impact is uneven. Social Security and Medicare payments continue because they are mandatory spending programs funded outside annual appropriations. Air traffic control continues because it is considered essential for safety. Airports remain open, but administrative services can slow. Permits, approvals, and federal reviews may take longer. Travel and business operations tied to federal sign-off can experience delays. Investors usually treat a brief lapse as political noise, but longer shutdowns raise concern because they signal instability in budgeting. What happens next is likely to move quickly. House leaders say they expect to hold votes once members return, with Speaker Mike Johnson publicly expressing confidence the lapse could end by Tuesday. That timeline is a political commitment, not a legal guarantee. If the House passes the Senate package and the president signs it, funding resumes immediately. If debate drags on, disruption expands day by day. Agencies have contingency capacity, but it is designed for short interruptions. Missed pay cycles increase pressure, backlogs grow, worker unions begin issuing warnings, courts and regulatory agencies start announcing limits. A key flashpoint remains DHS. The 2-week extension is finalized law as part of the Senate package, but it is also a ticking clock. If DHS negotiations stall, lawmakers could face a second funding confrontation in mid-February. That creates an incentive for a quick temporary fix now, followed by another round of high-stakes talks. A weekend lapse does not automatically signal a crisis. Many shutdowns begin quietly because agencies are closed anyway. The real test is what happens when the work week begins. If Americans start seeing visible service closures, delayed payments, or regulatory bottlenecks, political pressure accelerates. For now, this is a narrow shutdown caused by timing and negotiation strategy, not a collapse of government operations. Essential services continue, benefits continue, but thousands of workers are in unpaid status, agencies are freezing non-critical work, and uncertainty grows with each day the gap remains open. The situation is best understood as a warning light rather than a breakdown. Congress has already shown it can reach a funding compromise. The remaining question is whether lawmakers move fast enough to restore operations before administrative strain turns into broader disruption.